here, Alpha Spread playlist, where I've done 300 stocks, and you can go and check out all of those. Also, you can look below in the description for my extra channel, 24 hours a day radio show with full analysis, technicals, charts on the screen, and different things, with live chat for all the members to support each other. Until next time, as always, take care of yourselves and each other. Time for another stock review, this time Fulcrum Therapeutics, FULC. During this review, I'm going to show you the balance sheet, the profit, the loss, who's buying on the inside, should you buy this stock or not. I'm going to use all the latest software to provide you analysis, breaking news on the earnings, what's the short position, what's going on. I'm also going to do a back test on the stock so you can make an informed decision whether this is a stock for you to buy or own or whatever. All right, so we're going to get straight into it. So do you think you can make money out of this? Can we turn the money printer on? It's very risky, of course. We're talking therapeutics, always a risky play if you are in this kind of stock. So be very careful as my robot comes towards you before you start plugging in to buy this one. It's a very risky stock. Therapeutic stocks in the lab. Yeah, we're working in the lab. We're sitting around the table, and here come the white stuff. There you go. That's the white stuff. This is the table. There you go. That's better. We're sitting around the table trying to make some money. Can we make some money on this stock? Well, you decide. I only own the S&P 500, so you know I'm telling you the truth. I'm not pumping and dumping stocks, but I do rank number one for most stocks that I cover. And what is on my lapel today? Secret code. Has it got something to do with Illuminati? You decide. Comments in the chat and let me know what you think. All right. Let's start off nice and simple. And if you are a member of our channel and you do a minimum of $5 super chat, you can have an earnings. You can have a review just like this. And if you do the minimum, $5, it's at the bottom of the list. If it's more than that, it goes to the top of the list, and you understand how it works. All right. It's a member's perk with a $5 super chat. Okay. Fulcrum Therapeutics. Let's start off nice and simple and discuss what this is. There's the chart. Overall, you can see it's down overall at 77%. You can see it's a trading stock, up and down like a yo-yo. You know, full disclosure, very, very risky stocks these are. I wouldn't be touching Fulcrum Therapeutics. Sorry, I rephrase that. This industry, biopharmaceuticals, is extremely, extremely risky. So if you are doing it, remember, one thing goes wrong, a trial goes wrong, they get sued, something doesn't work out. You know, it's a very risky business. I own stocks like this within companies like J&J, within the S&P, much, much safer way of going. But anyway, let's have a look at what it is. Fulcrum Therapeutics is a clinical stage biopharmaceutical company. The firm develops new medicines and focuses on unlocking gene control mechanisms to develop small molecule therapies. Its product candidates include losmapimod and FTX-HBF. The company was founded by Michael R. Green, Danny Reinberg, Rudolph Janesh, and others. And is headquartered in Cambridge, MA. The listed name of FULC is Fulcrum Therapeutics. The CEO, now, if you'd like to learn from the company itself, we have a Meet the CEO series. You can ask them to be live on the show with me. How do you do that? Well, email customer relations, investor relations, and tell them about the show, that we have a Meet the CEO series. And we are often ranked number one for that. And then eventually you'll build up a relationship with them, and they'll go, okay, then finally you can put them in contact with me, Martyn at martynlucas.com, and we can get them on the show. All right. Employee 76, Massachusetts. Volume, no volume. So if you're trying to sell the stock, you could be stuck in the stock, trying to get out, and you just simply can't, because no one's prepared to buy. Remember, when you sell or buy a stock, it's a two-way transaction. To be able to buy something, someone's got to be selling it. If they're not selling it, the price goes up. That's how it works until they start selling. Such low volume means you've bought this stock, you want to sell it, and no one's prepared to pay the price that you want, so you have to sell it for less. That's what drives the stock down. Anyway, I like high volume stocks. Market cap 178 million. Very, very small, around 100 million. We can actually move it live on our show. Not that so our intention, but we rank number one, and it's a bullish review, and I don't know yet if it is or not, you can often see the stock move just because of the fact we rank number one for it. Price earnings ratio, it's losing money, negative 11 times earnings, so 11 times losses. At the moment, not very good at all, but that's what you'd expect from a company like this until it breaks through. Analysts are saying it's a hold, not a buy or a sell, it's a hold. But remember, this was paid for by Global Star. I don't buy any of their reviews. I don't believe in the reviews. I've done my own. They're paid to say it. I'm not. Hedge funds. Hedge funds have been getting rid of this stock recently. As you can see, hedge funds have been selling it off recently. What about insiders? Insiders have been dumping it as well. Now, normally I'm not bothered about insiders selling, but when they're selling 10 million in that period and we only have a market cap of 178, that's not good. We get a lot of insider selling, and it's just normal tax purposes. But when the market cap is 178 and they're selling 10 million, insiders are dumping their own stock and getting out of it. So that doesn't look good at all. That doesn't look good at all. Earnings. Well, we last reported earnings just recently, actually. As you can see, it's constantly losing money. In Q2 of 24, it massively beat on earnings. Absolutely great. It became cash positive. That was great. However, that is the moment then the business should take off. Obviously, a trial went well. It's made some money. It sold some technology. It sold some research, or whatever's happened at that period of time. It should have carried on. It didn't. It did beat earnings again, but it became losing money again. Now, that could be because they're spending money in research. We don't know. We'll find out in a minute, but we want to know what caused that, right? Who's buying the stock? Now, what company does it keep will tell us how it trades. Plug Power, very manipulated, very scary. Pfizer, great company. I can see why people would buy Pfizer, but completely different business though. Fuel cell, very risky. Neo, Chinese stock. Rivian, a lot of gamblers coming in now. Snap, rubbish. Snapchat doesn't do anything. Tilray Brands, very risky. Oxygen, Soundhound. I like this one. I like the technology, but it's a very, very volatile stock. ChargePoint, Lucid, worst stock on the stock market after Mullen. Peter Rawlinson stole all the money, basically. He just pays himself all the profits. It's ridiculous. I don't know how he gets away with it. Robinhood, a great company like that, but I can see Intel, rubbish. SNDL, yeah, it's the best of the sector. Blink, AMC, all gambling, yeah. Moderna had its day. Ford doesn't do anything. So a lot of volatility here. Margin maintenance, 100%. So if you're buying it on margin, it's as risky as it gets. So far, not looking great, obviously, but you can see it's a trading stock. I am a trader when I'm taking a break. 19 trades in October, 19 wins, never lost at all, always make money. But I only buy stocks I can own forever. So I bought McDonald's when we had the E. coli scare. I bought Enphase Energy when we had the disappointing earnings. These are stocks I can own forever, and I made profits on all of them. I wouldn't just buy something because it can trade up and down like this, because I could end up being stuck in the down, never get out. And I consistently make money. I'm not interested in losing money. That does not appeal to me at all, with the hope it might make me rich. I'm rich enough with all of you joining me every day. I've got everything I want, so I don't take gambles like that. Anyway, let's look at the numbers now and the latest news. So first of all, if you like this, please click subscribe, ring the bell. And also, would you please tap the like button as well. Songs for Space just said, one of my members, Fulcrum failed their clinical test for main drug, more or less dead in the water. Okay, that would explain that big dip there. Thank you for Songs for Space just giving me that news. One of our members here. I can't validate that information, of course. Just want to be full disclosure, but our members are all known to me and they're all credible people on the show. Great. Okay, let's show you some numbers now. As we start off with the ratings. It's not a buy. No one's buying it. No one's selling it. They're just holding it, wait and see. Okay, never like to see that. Valuation, A minus. It's improved on its valuation from B minus up from C minus. So the valuation's improved by the fact it's gone down, and it did perform. It did have a moment, but anyway, C plus growth. That slowed down. It were B before. Profitability, B. We'll come on to the profitability in a minute. Momentum, D minus. A minus, looking good 3 months ago. Now not good. Revisions, B plus, down from A. So not looking good there. What about short interest? 9.2. Do not expect a short squeeze. There's not enough short interest to pop it up. We need a lot more than that. There's no volume either. So you're not going to get a short squeeze, but people are driving the stock down. So it's got a lot of downward pressure, nothing to really take it up at all. Right, let's move on and let's look at this latest news. November the 13th, this is just a few days ago. Beats on negative 35 beats by 0.05. So it did slightly beat on earnings. Like I said, it was a slight beat, but still losing money, just better than people thought it was going to be. End of the third quarter with 257 million in cash equivalents and marketable securities. Cash guidance based on its current operating plans, Fulcrum expects to end 2024 approximately 240 million of cash equivalents and securities, and expects its cash burn to be the full year 2025 with approximately 55 million to 65 million. Fulcrum also expects that its cash equivalents and securities in September will be sufficient to fund its current operating requirements into at least 2027. So it's got a couple more years of run rate before it runs out of money. Then it would have to go to you to dilute the stock and all the rest of it. So yeah, it's not looking great. Fulcrum Therapeutics swings up 17% on Pfizer sickle cell during setback. Now, this was what happened a few months ago when it popped up, but then we know it failed. So we're expecting it to do well, and then it didn't. That's the news that our member just highlighted me to there. Shares of Fulcrum are surging. This was back in September. Thursday, as the company's sickle cell therapy asset is seen benefiting from Wednesday's announcement that Pfizer was recalling its sickle cell treatment over safety concerns. So, and then we know what happened next. Okay. So we don't need to cover all of that. Okay. Let's now look at we'll do a back test and then we'll do the main numbers. As you can see, since 2020, it's only 4 years, the S&P's in blue, steady growth. This stock is up and down, ahead of the S&P, below it. In fact, 3 times it beat the S&P and then dropped off. Very, very risky. Obviously, we all know what you want to do. You want to buy here, sell here, buy here, sell there. But that's not how it works. It's very, very difficult to do that. If you put $10,000 in 4 years in the S&P, you got 19 grand now. You've doubled your money in 4 years. The 10,000 in Fulcrum, you've now got 1,800 left. You've lost a lot of money, over 80%, right? Let's look at the numbers and let's see if we can make money from this. So here we go. Tap the like button and consider subscribing and ringing the bell. What we're going to do now is we're going to look at the numbers and we're going to see if we can actually make some money from this stock by looking over the numbers. All right. So let's see if we can. And it's an opportunity for you. Maybe, maybe not. Right. The price right now is $3.36. And the intrinsic valuation on this stock, which is unreliable because it's only uses DCF valuation, they don't provide enough information yet, is it's overvalued by 28%, base case, undervalued, best case, 17%, or worst case scenario, 86%. Well, we could be in that territory now, couldn't we? We've had a failure. So let's scroll down. Let's have a little look at the revenue. There's the revenue, 80 million, down 0.19, expecting to rise. This is where we are. Let's go to back to 24 here. estimate in December. When are they going to report? They're going to report in the next earnings will be in, or they're not showing the date, but we're expecting into December. No, I can't see the date. They're not showing the next date. They've just announced. So anyway, we're falling away, expecting to rise potentially in 26 if things go well. But we know they've got enough money, or they say they've got enough money to 2027. Operating income up 13% and now falling again. Net income up 11%, now falling again. After that, operating cash flow up 27%. Investing cash flow up 23%, which is a negative. Operating cash flow up 31%, which is good. So, they had this recent bounce on the last earnings, but now it's all fallen away again. Let's look at the assets. Let's look at the balance sheet. 279 million, of which is cash is, okay. So we're just a bank. I don't like that. Loads of cash. We're just basically all cash. We're not doing anything right now, not making any money right now, waiting for more breakthroughs. This sector is very, very risky, and this company is just not doing anything. So it's just cash. 257 million. Let's look at the balance sheet. Have they got any debts? No. No long-term, no short-term debt. Okay, they're just cash. That's good. The balance sheet will be okay, but they're not making any money. It's not for me so far. Nothing about this is appealing to me at all. Again, I'd rather buy it on the news or something breaking and then buy it than just to buy it because you can. There are thousands of these sort of stocks which sit at the bottom like this, going nowhere. And it's just a gamble whether they're going to hit or not. Operating margin, negative 35. Net margin, negative 22%. FCF margin, 11%. If you want to know what these mean, all these terminology, these terms, you can open up the software. Again, I'll give it to you in the chat right now, or I'll give it to you below. This is Alpha Spread. A lot cheaper than Seeking Alpha. It's a very cheap product, inexpensive, I'd say. Great. I use it all the time for my analysis. Strongly recommend it. My members can all get a deal so good. It makes my membership virtually free. So strongly recommend you use this. I love this software. I know the CEO, and he's brought me such a good deal. It really is great. ROCE down 11%. ROIC down 158%. Need I go on? Everything is down. Not looking good. Scroll down. Profitability. You can see, look, 36%. We've seen a lot worse. They are making, some profit on what they sell, but overall they're not doing well, right? 36%. We've seen a lot worse than this. We've seen a lot better as well. Solvency, like I said, pile of cash, not going to go bust. You can buy it, not, knowing you've got a couple of years here. They're saying 2027. Maybe you like the idea. Maybe you like a bit of risk in your portfolio, could break through, and that you can get out of it in the next couple of years. Maybe. Worst case scenario, 41% downside. I don't like that. But look at the upside if it goes right. If anything goes right, 57% upside, 327% upside. But, I can see gains like this and other things without the risk. So it's not for me. I'm going to say that right off the bat. I think we've covered it. We did see insiders selling recently. It's not showing up on here, but we just confirmed it. So for me, this is not a buy. I think it's very, very risky. If you are a trader, you might like this, find an opportunity to trade, but the upside is great. But there are other opportunities. But I don't think the risk to reward is worth it. There are other things you can invest in without the risk that can return decent profits. Remember, I've always said if your focus is chasing stock, 95% of day traders lose money. If your focus, however, is how to save money and not lose money, you're more likely to win. And that's why my portfolio is always up. And as you can see, I'm up again today, my all-time high. Again, another all-time high. I'm making money all the time without taking all these risks. What's important? sleep at night, relax, and get to where you want to do, or try to get there in 5 minutes. I don't know. I know what I prefer. So it's not one for me. Click above my head for all the links. This stock is not one for me, I'm afraid. Down below in the description, you'll also find our extra channel, which has now just got a big boost. We are live 24 hours a day, live radio show. You are getting live reviews. And you hear, I can give you this right now. This is my alpha spread. I know the CEO. There you go. There's all the information there. All the links are below. We've got live charts, live news, live tickers, 24 hours a day, live chat with the members. People can discuss things, speak to me 24 hours a day other than when I'm asleep. You even get live cameras. You can see behind the scenes all day, every day. This is fantastic. Breaking news, videos I post as they appear on the channel, plus much, much more coming day by day. This is a great, great feature, and I'm really proud that we've got now a 24-hour a day live feed, and it's just going to keep getting better. I'm extremely proud of this. This is like cool. I've got my own radio show. Anyway, so there you go. Check that out. What we're going to do now is wrap this video up. So all the links up there, down below. Over here, I shall put the playlist for this stock, so you can see FULC's full playlist. And down here, the Alpha Spread playlist, which are all the stocks I've reviewed with using Alpha Spread, Seeking Alpha, all of it. You can go and check it all out. All right, that's all my stock reviews. Until next time, as always, take care of yourselves and each other. Time for another stock review. This time we're talking Datadog, DDOG. If you are one of my members and you do a minimum $5 super chat, I will do an analysis and review like this and promote it on YouTube, and you will end up with a video that ranks. I'm sure most of my videos rank for #1 for the stocks. Remember, I don't own any of the stocks I review. I only own the S&P, so you know my views are real, unbiased, factual, present you the news in the best way possible, not to pump and dump a stock, okay? It's not financial advice, but I'm just breaking down the news for you. Please tap the like button, consider subscribing. During this review, I will break down what the stock is. I will also share with you unedited, live as it happens. These videos are always made live. Using Alpha Spread, you can get my software for free or a discounted pro version. I will share with you the intrinsic valuation. I will share with you the profit, the loss, who's buying on the inside, who's selling on the inside. I'll also share with you my Seeking Alpha Pro platform, which you can again get a free trial and discounts for. Latest news, back tests, all of this will be covered during this review. All right, so have you tapped the like button? Have you left a comment? Do you like this? Would you like me to do a review for you? Let's get straight into it, and hopefully then you'll be able to make an informed decision whether this is a stock that you should buy, hold, or sell. Let's start nice and simple. I don't apologize for starting simple, and we get more advanced as we go through the review. So there you go. Let's have a look at the maximum line. As you can see, over period since 2019, the stock is trending up. Certainly looks like a tradable stock to me so far. Back on the day, we're up today 1.21. What is the company? Datadog engages in the development of monitoring and analytics platform for developers, information technology, operations, teams, and business users. Its platforms integrated and automates infrastructure, monitoring, application performance, monitoring, and log management to provide real-time observability of its customers' entire technology stack. Okay. Now we have an indication of what this is about. Olivier Pommel, if you'd like Olivier on the show, the CEO, please email customer relations, investor relations. Tell them that you're an investor and you'd like them on the Martyn Lucas Meet the CEO series. I'd love to hear from him and learn about the company. Not to pump and dump it, but to provide a ranking video to inform their investors of what it's all about. Build a relationship. When you have done that with the company, let me know and then put them in contact with me. 5,200 employees, headquarters New York, founded in 2010. Quite a new company, but good when it comes to margin maintenance, 25%, the same with the S&P 500. So it's regarded as relatively low risk. You can see that from the trending upwards. 53.2 is the market cap. Price to earnings ratio, 286 times earnings. This is much more expensive than Nvidia. This is more like Palantir and the early days of Tesla. Very, very expensive. Obviously, no dividend here. There wouldn't be. It's a growth stock. Low volume. Very, very low volume. Now, why volume is important is high volume allows you to trade it. There's always somebody wanting to buy your shares. If it's a low volume, it's harder to sell for the price that you want. Always use limit orders. Don't just click the buy because you can end up not getting, when it's low volume like this, you can end up selling your stock or buying your stock for the wrong price. You need to make sure, particularly with a low volume stock, that you set your buy limit orders, not just click buy and hope for the best. Very, very bad idea if you do that. Okay, let's look at the analysis. Morningstar, who I don't take any notice of, they're paid to say these things. They say strong buy rating, 91%. Okay, 91% sounds very expensive for me. See where I'm going with that? They're paid to say these things. I don't know. Datadog is focused primarily on small and medium-sized clients. We see a big enterprise opportunity for the firm. This was out just a couple of weeks ago. Bears are saying Datadog's penetration of the enterprise market lags some of its peers. That's what the bears say. Now, let me show you the trading interest. Let's see how and who and why and what's buying the stock. Robinhood investors, you know me, even though I'm a Robinhood investor, I don't care what other Robinhood investors do, really, because they can't move the market. Not a company this size. GameStop, a meme stock, yeah, of course, but otherwise I'm only interested in hedge fund managers and insiders. These are the friends I have on X and Instagram. They tell me what's going on. Looks like we have, looking at the sides of the trades, looks like we have taxable trades. That's no big deal. The stocks, the hedge funds aren't dumping it. They're just trimming as they go. It's a responsible thing to do. Insiders, well, they've been selling more, but again, very, very slow. Very, very low volume. 1 million. Look at the trades. Nothing. That tells you that they're just doing tax transactions. No issue there. We all want to see buy-ins coming in, but these aren't buy-ins or sales. These are just very, very small, taxable trades. Economic moat, narrow, not non-existent, narrow. We'll talk about the margin profits in a minute and how that impacts the moat. Fair value, 130. So they're saying 130. So it's overvalued because of 156, even though it's a strong buy. Well, we can look at that in a moment. Uncertainty, very high. That doesn't mean anything at all. Anything new is like this. I'm not concerned about the very high, and I'll explain why later. Look at the earnings. Now, this is a great story. It's a profitable business. The earnings have been moving up, but what's interesting is Wall Street cannot analyze this. They can't get this even close. The company are outperforming what analysts are saying, what Wall Street is saying. Remember, the light green at the bottom, or I should say the dark green at the bottom, that's what analysts think the stock's going to do. That's not what the stocks say they're going to do. That's not what the company say they're going to do. You don't know what they're going to do until they release, right? Virtual handshake to Martyn for Mobix. Who is Thoddyfly? Is that my friend messaging me on X? If that is you, could you let me know? I'm making this during a live video. This will be interesting. We've got some very exciting news coming out shortly. I want to know, is that my contact on X? Just reply back to me. Anyway, virtual handshake to Martyn for Mobix. Very exciting news, if that's what I think it is. Anyway, they can't really analyze the stock, and you can see it's been performing well, and it keeps surprising. You can see why the stock is overbought on that basis, because people believe in it more than Wall Street believes in it and buys it with the belief it's going up, and it keeps doing that, and it keeps going up nicely. Now, we have had a slight dip in expectation, so something is scaring Wall Street a bit, but is it going to beat again? And if it does, will it beat by a large amount? Probably. So anyway, let's scroll on down, see who's buying the stock, gives you an idea. So again, you can see companies here where people all get very passionate about it. So value could go out of the window with this stock. CrowdStrike Holdings, Salesforce, Airbnb, Cloudflare, Shopify, Trade Desk, Dexcom. No, I'm new but love you. Virtual handshake to Martyn. Oh, I see. You're thanking me. You enjoyed the earnings, the event. Okay, now I understand. Thank you very much for explaining. Twilio, Crown Castle. Okay, we see some volatile stocks here. We can see a very similar pattern. Okay, with that, so you can see a good indication of that. The sentiment of the stock. Right, let me show you now the news on the stock. Let's have a look at that now as you scroll down. If you like this, please tap the like button and consider subscribing to the channel. It's most certainly, I've already noticed, it's a tradable stock, but you can see the volatility here until recently, year to date up 31%. Anyway, let's go and look at the news and let's learn more about it. First of all then, now this is interesting. We'll start with this. If we look at this, first of all, this is my Seeking Alpha analysis. If you want to use my software, the links are below. Free trials, discounts, Black Friday, and there's my alpha spread. I'll put it in the chat for you now, but also everybody else can get that later on below the video. This is interesting. The forward PE is 87 times. Well, you can see how much better the forward is. So their projections, their growth forecasts are actually now making the stock not as expensive as it appears. Now I can see why people are buying it. Remember, we've had Tesla, triple these numbers. People were still buying it. Palantir, double these numbers, I think, double numbers. People still buy it. People love this stock and want to own it, but the forward ratio isn't actually as bad as you think. 87 times earnings, it's a lot, it's expensive. However, nowhere near what the lagging indicator is. That's why this software is so useful, telling you actually it's not as expensive as you think it is. Short interest, 3%. Sorry you can't see it, but short interest, 3%. Don't expect a short squeeze. Don't expect a major downtrend. 3%. When a stock is dramatically overbought and expensive, you'd expect it to be higher. It's not. So that's why the stock keeps going up. The 3% short really isn't anything to drive it down. Seeking Alpha analysts, they say buy. Strong buy from Wall Street, and Quant are saying hold. No selling, definitely a buy. Okay. Valuation, like I said, it's expensive, but the growth is B. Hasn't changed. Profitability, A minus from A again, down slightly, but not much. Momentum, B plus, down, up from C, and revisions, B plus. So it looks quite optimistic. It looks a buy from where I'm looking at the moment, but there's more to this, and we're going to come on to it in a moment. So looks pretty good from the factor grades, momentum, and the ratings. Let's move on to the news. We've got some news here to share with you, but I'm also going to look first of all at a back test. This is where I've compared the stock to the S&P. This is going back to 2020. We only have 4 years, so it's not really a good tool to use against the S&P, but it's the best that we have. As you can see, Datadog is up and down and up, right? But it's not ever trending below the S&P over 4 years. A reasonable time frame. It's never gone below the S&P. It's outperformed the S&P. And as you can see, you can buy here, sell here, buy here, sell here, buy here, sell here, buy, sell. You can see how you can make money from this stock. If you put in 2020 $10,000, you'd now have doubled your money in 4 years, 19 grand in the S&P. You'd have 3x in the in Datadog. So I can see the attraction to that from the back test. Remember, there's no dividend here. This is just growth. All right. Okay, let's look at the news, and then we'll go into our alpha spread, and we'll look at the data, the alpha data. All right, so let's have a look. Please tap the like button if you are enjoying this so far, and consider subscribing. That would be absolutely fantastic. Let's have a look. Datadog keeps bullish view as analysts praise strong Q3 earnings. Let's have a little look. Morgan Stanley maintains overweight rating on Datadog and raised the price target on the shares to 143 from 137. It's past that now. This was just a few days ago. Analysts led by Sanjit Singh said Datadog posted the biggest beat of 24, a strong growth from enterprise customers. Now, this is interesting, that word enterprise, because this is NVIDIA speak, Google speak, Meta speak, and all the rest of it. Microsoft. These companies are doing well and they're spending money with each other. I like it. If there's enterprise money flying around, I can see why Datadog is being bought up. I can see that this will be, I already know from the language that this is going to trend on Google, and more people are going to learn about this. And I can see this doing well from a video point of view, which means people love this sort of news, and more, a bullish sentiment can remain here. I can already see how this is going to go. This could be another SoundHound. It could be another NVIDIA on our channel. We shall see. In the near term, modest deceleration is likely, but the analyst thinks the company is a top beneficiary once the AI cycle transitions from training to inference, thus giving the overweight rating, the analyst added. Datadog reported its strongest revenue beat of the year, resulting in growth of about 26% versus around 27% in the second quarter. Large customers remained the fastest growing group, which translated into another quarter of modestly improving net retention and usage growth, according to the analyst. The fourth quarter revenue outlook was in line and implies growth of 20% to 21%, according to the analyst. Singh and his team see Datadog at or near peak execution, implying that better growth needs a stronger spend environment, or the AI cycle moving from training to inference. Citi kept its buy rating on Datadog and increased the price target on the shares from 157 from 150. Okay, I'm not going to read any more of that. I'm going to move on to this next story here. Datadog revenue soars, raises 24 outlook. We've already talked about that. Is there just a couple of paragraphs I'll pick up? Datadog stock was strongly flat pre-market on Thursday after third quarter results and outlook exceeded expectations for the third quarter, September 30th. Okay, that's a little while ago. That was the earnings. Okay, we've seen that grow. The outlook, the company expects fourth quarter revenue to be between 709 and 713 million, which was above consensus estimates of 710. Quite a decent amount, actually. When is the earnings? When's it going to be? We might cover this if one of our members does a $5 super chat. Expected February the 11th, pre-market. Okay, so we might do this earnings if it's requested. Let's go now, and if you do like Seeking Alpha and all this information, there's a Seeking Alpha or the list, or it'll be pinned below. Let's now go to the alpha spread, which is what I like to give me a real sense of where the company is going. I like this software. Please tap the like, subscribe, ring the bell. If you like Seeking Alpha spread, I've got a deal with the CEO, which can make my membership for free. There's a free plan, plus you can get a discount so good it makes my membership for free. Now, if we look at the valuation, I can see now why this is being overbought. It makes sense. It's perfectly understandable. Overvalued by 70%. Now, my rule is never to buy something more than 25% overvaluation. However, looking at the PE, that would translate to about a 50% overvaluation, which is still hot for me, but I can see why. And certain stocks like Nvidia and anything that drags in AI and relationships to it can be overbought, but the growth, the forecast looks good where it's going. As long as we got a good balance sheet, plenty of cash, not too much debt, this could be a buy from me. And I know that this is going to be received well on YouTube, so I can see people lining up to buy this stock already. So we'll come on to that in a moment. So let's have a look at the valuation, right? We'll look at it properly. So let me just keep an eye on that. Right. Okay. So intrinsic valuation isn't too bad. If we look at best case scenario, 46%. Worst case, we're not in a worst case, and we're not much off the base case. So I think we're more in a best case scenario. I can see why you want to buy this. I can see why. I think it's Brian Bynum sponsored this one. Why he wants to buy it. I can see it. Let me scroll down. Let me come on to revenue. Now, revenue, we've got approaching an S-curve, up 6% and expecting it to climb in the future. I can see how it can. So the revenue is good. Operating income up 51% and expecting a big boom here in December. Bloody hell. Guidance is great. If that comes off, I can see the stock doing well. Yeah. Up 18%. S-curve in December. Woof. Woof, woof, woof. Look at that. Woof. What a jump that is. Okay. I can see why you want to buy this. And as I talk about it, very often happens in my reviews, being bought up. Look. It's being bought up again. I can see why this would be good. So far, it's a potential buy from me, but I haven't seen the balance sheet yet. Investing cash flow up 17%. That's a negative. Operating cash flow up 10%. Let's scroll down here. Balance sheet, right. 4.6 billion in assets. Cash 3.2. Bit rich on cash. Not a bad thing, but I prefer not to have so much cash, really. But you know, it's not a bad thing to have cash, but it also means that cash is 69% of their business. It's not the sort of thing I like, but it depends on the debt position. 4.6 billion in assets, 3.2 billion in cash. Long-term debts, none. Short-term debt, none. Loads of cash. Well, we all know what comes next. From experience of doing this, we know that we're going to get we know that we're going to get a good balance sheet. We know we're going to get a good solvency, which means, from what I just said, it's a buy from me, even though it's expensive. But Nvidia is expensive. But look at the forward. It's not as bad as you think it is. Okay, I can see where this is going. It's going to be a buy from me. Let's have a look here. Now, operating margin is 81%. Sorry, gross margin is 81%. Operating margin, now this is where it falls down a little bit. Net margin. We want to see these net margins going up. They're obviously spending money because the net margin is nowhere near where it wants to be. If we look at it earlier, it said the moat, I think it was small. Narrow. Yes, it is. You see that, look? When we looked at our previous analysis, it was none. Now we've got narrow because that was net margin of 6. This is net margin of 8. So it's better, but it's narrow. We need to increase this. I'm in the wrong page. There we go. Back to here. Net margin of 8. FCF margin 29%. If you want to know what these mean, again, you can access my software, open up more information, look below in the video. Alpha Spread, strongly recommend everyone gets it. You can get a free plan or a pro plan, which makes my membership for free. It's that good. The deal I've got with Alpha Spread is really good with the CEO. You're going to love it. It's really cheap. It's a lot cheaper than Seeking Alpha, a lot cheaper. And I like the way it's laid out, really. ROIC 5%, ROA 5%, and all this moving up. Okay. Let's look at this. There you go. Profitability 56. So it's early days though for this company. It's quite new. We talked about it earlier, didn't we? It's only been around since founded 2010, but it went on the market from a public point of view in 2019. It's a new company, so profitability is bound to be low in the early years. It makes perfect sense. 56% though is still quite good, but just not great. But it's early. But like I said, there you go. That's what you want. Solvency, solid. You can invest in it, not worry about it. Brian Bynum, I know you're excited about this one. I'm going to give it a buy. I'm going to give it a buy because, not because of the downside, Wall Street, because we're not in that territory. It's flat on the average. I'm not losing money. That is why I like it. And I think that's where we are. 54% upside. So I'm with you, Brian. It's a buy from me. It's expensive. Just don't get carried away all at once. I know you'll be happy with that because you'd be buying it. 65%, 65 million. These are tax positions sold. People taking profits. Well, we see Jensen doing it all the time. I'm not worried about that. So let me wrap up my review of Datadog. This, I know, definitely is going to trend on YouTube. I bet it'll be one of my top, and it'll be up there with SoundHound. It'll be up there with NVIDIA, maybe NVIDIA. I see the relationship. The balance sheet is okay. It's a young business. I like the correlation. They've got no debt, no short-term, no long-term. It's expensive, but I can see why it's expensive. People are buying it ahead of time. It's a tradable stock. My thoughts would be that's the maximum position we're looking at right there. If I'd say it's a buy. I like the sector, but if I was buying this again, what I would do absolutely with this stock, 100%. It's trending up at the moment. It's approaching all-time highs. I would, if I had $1,000, I would put 500 in. I'd put 50% in. I'd put 50% in, not all in. I would, if I then made a 5% profit, I would trim half my position. I would then have a 5% profit. I would do it on my IRA, so I could trade it tax-free. I wouldn't do it on a brokerage account. I would then sell half the position. I would then wait for a dip, and I would wait for a dip. I would then buy back with the profit and the half of the money that I took out. I would add then my other 50% when it dipped when it went back down to where I bought it, but perhaps actually a discount, another 5%. I would then be all in with my full allocation. I would then let that run for a while. I would then be looking for another 5% profit, and it wouldn't take many more of those to have my seed money out. So it's now, if you like, playing with the house's money, and then I would build a position over time without any risk like that. That's how I would play this. So Datadog is a buy from me with that structure, discipline, patience, waiting it out, doing that. That's what I would do. I would enter it today with a 50% of my allocation, wherever it is I'd allocated to buy this stock, and stick to that, and you'd be all right. I like it. Click above my head for all the links down below in the description. I'll post Alpha Spread, Seeking Alpha, and all the rest of it. Over here, I shall put the playlist for Datadog. It's probably the first one. So all the news, if anyone asks me to do an earnings, any breaking news. If this video does well, I'm sure I'll start covering breaking news from it here. And down here, I should put the Alpha Spread playlist where I've reviewed many stocks, over 300, and you could check out all my analysis stock down below. All right, that's it from me. And if you like this information, 24 hours a day, we have a radio show now on the Extra channel. I'll put the link below that as well, where we go live 24 hours a day now with different scenes, always bringing you financial radio Listening.
Hasn't been reached yet, Nick. So where do we stand?
Discussion, debate, live news, trends, analysis. It's a communication for the family to talk to each other, share opinions, thoughts. You can see all this chat going down here 24 hours a day. A new service. So pretty good, right? It's I'm very excited about that. Anyway, there you go. I'll give you the links again. Above my head, down below, over here and over here. Check below for the extra channel, also be pinned to the top as well of the comments. Until next time, as always, take care of yourselves and each other. Time for another stock review. This time we're looking at HP Enterprise. Relationship here with our favorite stock, Nvidia. Now, during this review, you're going to get lots of information. I'm going to do full fundamental analysis on this stock, sharing with you the intrinsic valuation. I'm going to go down using our latest software, which you can access. We've got Black Friday deals, looking at the revenue, the financials, who's buying, who's selling. We're also going to run a Lucas Archie fundamental poll and to see how you react to this stock. What do you think of it? I'm also going to do the dividend payouts, how reliable it is. We're going to do a back test comparing Nvidia to HP, to the S&P 500. We're going to look at the latest news, the summary, the short positions, using all of my software, all of this, and then providing you with the opportunity to get the software, and you can do it yourself if you wish to do so. Now, all my reviews are done live. They are members only. If you are a member of my channel and you do a minimum of $5 super chat, I can do a review for you. However, it's Members Day today. I'm doing a live set of analysis for stocks. We've got half a dozen to do. When I get to the last one, then you will be able to start doing super chats or super thanks below videos. That's when you comment to a video below a video, and you can actually do what's called a super thanks, and it will share that on the screen. You can go under a video, comment, and do that. So off air, you don't have to be on air with this. You can do it off air if you want to as well. Okay, so this is a members only perk, $5 minimum. The more you pay, the higher up the list it goes. If you do $5, you could be at the bottom with 5 others. If you do 10, you could be at number 1. And I'm going to constantly update the list as we go, but not asking anyone to do it until I get 6 of these done and we move down the list. So today is Members Day. I might be running 24 hours to get all of these done. So now everybody knows how it works. Shall we get straight into our next stock review? So tap the like button and consider subscribing, ring the bell, and that helps support the channel. And the question is, can we make money on this stock? Is there ways to make money on this stock? I've got a button here somewhere, and for some reason it's eluded me. Oh, there it is. Yeah, here we go. Haven't done this for a while. Can we turn the money printer on? Scratch our chins. Look over the numbers. Can we make some money, or are we going to get all stressed and shout at the wall and not have a clue what we're doing? Well, the idea of these videos is to provide you the information so you can make an informed decision. Remember, I don't own the stock. I only own the S&P 500. I'm not here to pump and dump the stock. I'm just simply here to present analysis for you, and that's it. I only own the S&P. Right, without further ado, let's get straight into HP Enterprise. Start nice and simple, and then we'll get into much more detail as we go. What is it? Hewlett-Packard Enterprise is a global edge-to-cloud company which engages in the provision of information technology and enterprise product solutions and services. It operates with the following segments: compute, high-performance computing, and artificial intelligence, HPC and AI, storage, intelligent edge, financial services, and corporate investments, and others. We're not going to show you any more. You can open up this if you wish to do so for yourself. Been around for a while, 1939. Down the road from me. I'm in Dallas. This is in Spring, Texas, just down the road. Lovely to have a local business on the show. 62,000 employees, and the CEO is Antonio Fabio Neri. Now, if you'd like Antonio on the show, we've done many Meet the CEOs, and we can have Antonio on the show. What you do is simply email investor relations and you can tell them that you're an investor, you have interest in the stock and you'd like to hear more about it, and build a relationship. Once you've got them excited about being on the show, then you can put them on to me. I never go and sell my services. It's always done through the members. So simply message them and it'll happen. Margin maintenance, 25%. It's the same as the S&P 500, so it's regarded as relatively low risk when it comes to using margin to purchase the stock. Average volume, 10 million. Today's volume is 3.5 million, so not massive amounts of volume. People tend to buy this and own it. This could be the way NVIDIA is in the future. You buy and own. Great dividend, 2.3%. How reliable is it though? A dividend paying stock is only useful if it pays every month, every quarter, whatever it is, and never misses. Continually increases its payout, which would constitute it being a dividend king or dividend aristocrat or whatever. No point promising this if it only delivers now and again, or it reduces it, and so on and so forth. Anyway, remember, we need growth as well as dividends. We're not old men in our 80s just sitting down looking for passive income. We want growth, and we want dividends. Remember, you can't have necessarily one without the. You can't necessarily have both. If the stock is a growth stock like Nvidia or Tesla, they're not going to pay out a dividend. The day will come though when that might happen for those stocks. Price to earnings ratio looks quite cheap, but we'll look at the forward and the behind ratio as well coming up later in the review. We're just starting on nice and simple. Market cap 28.69 billion. All right, let's scroll down. We can have a quick look. In fact, the best way of showing you this, I've got a little scratch on my back. There you go, got it. Making this live during a live show. It's unedited. Let me scroll down and share with you some of the trading positions. You can see here, Morningstar say it's a hold, not a buy, definitely not a sell. They're paid to say that. I'm not interested in what they say, but it's worth knowing. The bulls say the AI server growth wave is just starting, and HPE will be a key beneficiary as inference workloads. Inference workloads. I've lost my place there. There we go. For enterprise begins to take off. The bulls. What about the bears? What are they saying? HPE does not have the best history of executing on acquisitions. The pending purchase of Juniper may not go well. Okay. Scrolling on down. Robinhood investors not interested with a stock of this size. What they're doing, no interest at all. What retail investors are doing, as you know, I build relationships with hedge fund managers and CEOs. I want to know what they think, because they move the stock. This isn't GameStop. This isn't a Binky Bonk. Honestly, I don't care what Robinhood investors say, even though I am a retail investor myself. I don't care. Not interested. I'm interested in what hedge funds. So we're not bothered about that. But we are looking at this. Hedge fund managers. Hedge fund managers have recently been dumping the stock in Q2. But it looks to me, looking at that, it looks very much like general tax positions. When you have an in and out of similar proportions and similar-ish, not exactly, but they're done at the same time, it's kind of like... it's not necessarily a bad sentiment. I don't see anything that's alerting me there. We will go further deeper in a moment. Insiders, less action. Less buying and less selling. There was something there back in December, but as you can see last year, but it's been trimming down. That's interesting. Are we going to get a big buy-in soon or a big sell soon? Well, we'll go further down into it later on. Okay, let's have a look. The fair value, $23, but we'll do our own analysis on the fair price shortly. But as you can see, it's $22 at the moment, $22.21. So you could regard it as undervalued, but we'll determine that shortly. Stewardship is standard. Economic moat, none. Economic moat is the margin of profit How much is the wolf? How far away is the wolf from the door before others can compete and drive their prices down? None whatsoever. So some risk involved there. However, it's not reflected in the margin percentage, is it? Anyway, what about the earnings? As you can see, it always outperforms the earnings for some strange reason. And we got this V shape. It was going down, but now coming up. Got a big expectation. The company is making money, of course. Anyway, we'll see. The next earnings is in December the 5th. If one of my members does a minimum $5 super chat, I can cover the earnings. Who else is buying this? It's worth noting because it gives us sentiment of the stock. Tells us how the stock will move and all the rest of it. So, you know, Intel, don't like it, rubbish. Cisco Systems, risky. Ford doesn't make any money. It's just old school money, doesn't do anything. HP, up 2.92. AT&T, don't like it. Pfizer, I like it. It's struggling a bit though. Dell, down. Okay, you can see what sector people are buying. Bank of America, banks. Mobile. Yeah, what this is showing me is old money. Old money, Coca-Cola, there you go. Old school money, sometimes good, sometimes not. It shows you that the volatility is not going to be there, which can be good or bad. Good from the point of view you can buy it and own it and forget about it. Live on the dividends if that's your aim, or trading might be more difficult because of the type of owners of this stock. Anyway, there's just a basic outline. Let's now go deeper in. We're just warming up, all right? So please tap the like button and consider subscribing. I'm making this during a live show. It's Members Week. I'm doing all the members reviews that were already requested before I went on holiday, and then I'll open it up for new requests as soon as I've completed. All right, I will come on to the comments after the review. I've done the review. Right, so where shall we start? Let's start with some news first of all. I think we'll look at some news and some general analysis, and then we'll get deeper and deeper as we go. So first of all, we'll look at the forward, the PE forward, 11.27. So it appears to be 11 times earnings, 11.27. It appears to be relatively good value. All right, how's it gone over time? Short interest, 2.55. No real short interest there, waste of time. Don't expect a short squeeze and don't expect anything there. 2.5 is some short interest, but nothing to be even considered about, even concerned about. Seeking Alpha analysts, they say it's a buy. These sort of things, they always say it's a buy. I'm not interested in what they say. Wall Street, they say it's a buy. Yes, they move the stock. I like that. Hold the AI software, looking at numbers without emotion, just a hold. So this is most certainly a hold or a buy. No selling going on here. Valuation, has it improved? Well, we can see valuation has actually fallen off a bit. A minus to A and now B minus. So it's been better value. It's been better value. The growth, D minus, hasn't really changed. It's a steady grower, all right, which is kind of how this stock works. And it's about the dividend, right? Profitability, A plus, A, kind of bouncing around the same. Momentum, no real shift. Revisions, no real shift. Okay, let's look at some news. Now, I'm mentioning some stocks here that are related to HP, Nvidia being one of those. So we're going to bring in some other things here just to sort of see what the general market is doing around the stock. So here we go, and then we're going to go into the analysis deeper. So notable analysis calls this week. This is just out. This is 2 days ago at the making of this video, so it's very, very new. The S&P 500 closed in the green on Friday, with companies including Walmart, Nvidia, and Gap stealing the limelight with their earning reports during the week. For the week, Nasdaq and Dow rose 1%. Wall Street had a slew of upgrades and downgrades from analysts. Here are some of the major calls for the week. We're not going to cover all of these. I want to focus on the highlights. I want to talk about Nvidia because there's a relationship there. Nvidia receives rare downgrade from Phillip Capital. Nvidia was downgraded to accumulate from buy by Phillip Capital due to recent price movements as it awaits the Blackwell ramp. Okay, UBS was upgraded. I want to scroll down to this. We've got something coming up here. Nasdaq. Now here we go. HP Enterprise in focus after Raymond upgrades on Juniper deal. We just mentioned that a moment ago. HP Enterprise was in the spotlight as Raymond James upgraded the IT provider on the basis of the Juniper Networks deal closing shortly. Along with its artificial intelligence prospect, the brokerage also raised PT to 29 from 23 until it expects an inline quarter with HPE reports on December the 6th, with risk from federal vertical coupled with improved growth in FY25. We have refined our model to break out AI platforms and traditional servers, and this leads us to increase our FY25 sales estimates, analyst Simon Leopold said. Okay, then we move on to other stocks, which I'm not going to focus on just on this. Let's touch on one more bit of news. It does, again, relate to HP. NVIDIA's results seen as a positive for Arista Networks, Amphenol and others, and HP is mentioned in there. But again, I'm not going to go into that on this review. What I'm going to do now, though, is look at a quick back test. Now, this is important. What you've got here is if we put $10,000 back in 2016, so we've got 8 years of movement here. $10,000 in the S&P would have returned you 32,000. You'd a 3x over that period. Hewlett Packard would have given you a 3x just below the S&P, and you can see that. Look, if you look here, Hewlett Packard is in green, the S&P 500 is in blue. You can see how it very much correlates to the S&P. There was a slight dip here in 2020. This was COVID. So what this tells us is for pandemics, this company didn't do so well, whereas the S&P and also NVIDIA. Now, why NVIDIA? Well, the S&P has other things to support it. That's why that did okay. Hewlett Packard was affected because it's not sexy in rock and roll. So people sold it, bought NVIDIA. Quite simple. There's nothing more to say about that. You know, there's no reason why NVIDIA would pump in 2020 other than everyone's on Robinhood buying what's sexy and cool, and that's why that was going up. Hewlett Packard isn't sexy and cool, but you can see during pandemics, it doesn't have the protection that the S&P does. However, it can go slightly ahead, slightly below. You end up pretty much the same. If you look at that there, so the S&P is very much like Hewlett Packard. That shows you now why old money buys it, because it pays a better dividend. Simple as that. If you are in your 60s, 70s, 80s, and you're now wanting to just earn a passive income, Hewlett Packard might be one for you because it's about the S&P. However, it's going to give you that paying dividend all the time. It's more than the S&P. We all know that, right? So talking about the dividend, if we look at the dividend, how reliable is it? Okay. Now we're going to go back to 2015. Right, 5.5 cents. What we're looking for is it paying out every single January, February, March, April, every quarter, every 3 months, never missing, and whenever possible, increase. That's what we want. That's what we need. And then you've got everything all in one there. 5.5, 6, 6.5, 6.5, 6.5, 6.5, 7.5, 11 quarter. This is my little auction voice. 12 cents, 12 cents, 12 cents, 12 cents, 12 cents, 23 now, 13. There you go. So what we've got here is evidence of ever paying out, always increasing. We like that. So the last payment was 18th of October, 24, 13 cents. Okay. Good percentage, ever increasing. We like that. So a big tick for the dividend. So far, the back test is like the S&P, but we've got the extra dividend, and the news around other momentum stocks is good. We all know that. So things are looking quite favorable when it comes to the fundamentals, the news, the performance, the reliability, the structure, and so on and so forth. Now let's go over and look at the numbers and decide whether this is a stock for us to buy or not. All right. Obviously, it's better value than NVIDIA, and it pays a dividend. So it's got a different structure. Anyway, let's have a look at it. If you like this review so far, please tap the like button. and consider subscribing. I really do appreciate it. We're doing a members week. We're doing all these reviews, and you can book your own review shortly from a minimum of $5. We'll put you at the bottom of the list. More than that, we'll put you high up the list. Once we've done 6, you'll be able to jump in. All right, so the intrinsic value is $30. So undervalued by 27%. Okay, because we're at 22. So it does appear to be undervalued at the moment. Best case scenario, 53%. Worst case scenario, 10%. Intrinsic valuation looks good. No warnings, no alerts. Okay, no problem at all. Looking good so far. That's enough for some people, not enough for me. We need much more information to decide whether we should buy it or not. Let's have a look. Revenue up 3%. Now you can see it's decreased from 2016, but been going steady, and now we're steady. This is just like it's a bit like a Coca-Cola. Hence why those that own this also own Coca-Cola. You can see why. It's a dividend-paying stock. It just keeps doing business. It's not exploding, but just keeps doing the right thing. Nothing wrong with that. Good, solid. Operating income up 2%, improved, and are expecting a better performance. 1.9 billion net income up 3%. Okay, financing cash flow up 20%. Investing cash flow down 24%. That's a green. Operating cash flow is negative 7%. Now, if you like this software, a few moments ago you were looking at alpha spread. Seeking alpha, and now we're showing you alpha spread. Okay, two very different softwares. Alpha spread is a lot cheaper and a lot more straightforward to look at. I like alpha spread. It's a fantastic software, and I know the CEO of the company, and basically all my members can get a discount. So good, it makes my membership for free. Very nice. Go and check out alpha spread. The links are below and in the chat. All right, okay, let's look at this. This is the assets, 60.9 billion in assets, of which 3.6 billion is in cash. You know me, if you've watched the show, I don't want a big pile of cash. I'm not interested in Donald Trump stock just because it's a pile of cash. I can put my own money in the bank, thank you very much. That's not a stock, that's just a promise of something we might do. It's not a stock. This company has some cash, but most of its assets are working. I like that. Some have some cash, but don't have 80% cash. You're not a business. You're just a bank. All right. There's nothing to that. 60.9 billion in assets. Cash 3.6 billion. Liabilities 38.8 billion. Okay, quite a high percentage. But what about their short-term and long-term debt? Hardly any short-term debt, 735. We can allow that. Long-term debt 7.9 billion. So long-term debt is 20%. That's the right balance with interest rates coming down. That's a catalyst for improvement, but also it's not too much. And they've got 7.9 billion and they've got 3.6 in cash. They can't pay off their debts tomorrow, but they could knock it out the park. So the debt position of this company is quite good. So the balance sheet and solvency of this company will be quite reasonable. So we can buy this knowing we've got a company that's got, going to be around and all the rest of it. Now then, remember I showed you a moment ago that Morningstar, Robinhood was saying there's no moat. Again, very simplistic information, not completely accurate, but not far off. And I'll show you what I mean. The gross margin is 34%. Not very good for a tech stock, is it? It's not Apple. It's not Amazon. It's not Nvidia. All right. They're like 98%. All right. Operating margin 8%. Net margin. That's what they end up with. 6% margin. That's what's meant by no moat. So in other words, another company can come along, reduce its prices by 6%. That now the company can't compete. That's what a moat is. The moat is very low. Net margin is, non-existent to a point. Robinhood simplify it by saying it's none. It's not none. It's 6%. All right. Net margin isn't great with this company. Okay. It just keeps on making money. It just doesn't make huge profits on its services, products and services. FCF margin. Now, if you do like this and you're thinking, what is an FCF margin? There's the full explanation. But if you get my software, you can use this and go in and look at it further. And it's only a few bucks. It actually works out. My membership works for free if you get Alpha Spread. Strongly recommend Alpha Spread. I use it all the time, and I do all my reviews with it. It's the biggest part of my reviews. There is Alpha Spread in the chat. ROIC 4%, ROA 3%, and ROE 9%. Okay, let's scroll down. There you go. Exactly what I said. Look, you see, the profitability is 50. Well, it's not nothing. They make money. It's just not Nvidia. It's not Apple or Amazon. They do okay, but they pay out a lot of their profits in dividends. So, you know, it's being returned to the shareholder somewhere. You can't have high profits and no dividend, and dividends. It's got to be paid out somewhere. It's got to come from somewhere. Solvency, 48%. See, again, not the 90s like the big some of the big ones, but 48%. You can be okay with this. At 50, we start turning green, so it's okay. It's not going to go bust. It just isn't as good as others. But then, having said that, it pays out a great dividend. It's like owning the S&P in a way, if you want a dividend-paying stock. Anyway, what about this? Worst case scenario, we're not in a worst case scenario at all. We're in a very bullish period for this stock. 18% downside, wouldn't be concerned with that. I would just allow money to buy a dip if you could. So if I had $1,000 and I was going to go buy this stock, I'd put like 600 in or 700 in, and I'd allow for a little bit of a drop on an earnings, some sort of disappointing news, because even if the earnings was okay, you can have a little dip, you can buy a bit more, you can lower your average, then you can protect yourself on the 18%, right, or work towards it. Average cost, average forecast, up 3%, okay, but highest forecast, 37%. Okay, we talked about the dividends. We showed you the dividends, up 8%. Recently, we talked about the ownership, the selling. If I share this with you, you can see. So look, see what I said? It's about small tax positions. 11 million. This is no big deal. 11 million. They're just selling for tax reasons, automated selling. No big deal. Nothing going on. I'm not concerned about that at all. This was 6 days ago. Have we got any interest in showing you this? Who's it from? No. Don't need to share that. I'm not that bothered about what they have to say. So there we go. There is my review analysis on HP Enterprise. Is it a buy, sell, or hold? Well, before I tell you, if you smash the like button, leave me your thoughts below, and subscribe would be nice. Is it a buy, hold, or sell? If you have made money in the stock market, you now want to move into something which could benefit from latest trends and traction like Nvidia, AI, and all this, because they are related. If you believe on the deal, the upcoming deal coming off, no issues there. You want to buy a business that can similarly track, kind of close enough to the S&P, but give you a passive income. This might be of interest to you. If it then does, it ends up more of in a relationship with Nvidia and AI and all those other things, you could see extra growth in this stock alongside a dividend. Let's remind ourselves, this year it's up 31%. Now you might look at it as use it as a trading stock. You can see this. It's definitely a trading stock. Looking at that. It always trends up, but it's got a lot more volatility than the S&P, plus the dividends. That's over the 1 year. What about the 5 year? Definitely a trading stock. What about maximum? 100% a trading stock. There you go. The growth isn't the same as the S&P, but you've got the dividend, which is just approximately twice as much. So if you are looking for a stock that could benefit from current trends, that's a solid business with history, good balance sheet, not amazing, but good, and you want to earn a passive income, this could be of an interest to you. So there you go. Is it a buy, hold, or sell for me? Well, I think I agree with I think it was Wall Street. It's a potential buy for me. We've got a bit of a dip at the moment, as you can see. We generally, we typically always trend up. Buy it. If you are buying it for the dividend, make sure that you're buying it before the ex-dividend date to make sure that you're in. I can quickly give you the ex-dividend date as well. So let's end up with that. The ex-dividend date, if you want to be in, is ex-dividend date, this one down here, 11th of December. You need to be in the stock, settled, allow 3 or 4 days by the 11th of December if you are looking. So it's now. It's now or never, the next few days. So there you go. Interesting stock. It's a potential buy from me, most certainly. It's a good company. No problem with owning this long term. You just buy and hold and receive a passive income. Not too bad. And now you can have all the excitement that comes along with AI. You've got that. You've got that. And you've got some good value as well. It's okay. Click above my head for all the links down below in the description. Over here, I shall down below in the description, I shall put the link to my Alpha Spread playlist. I've reviewed over 300 now actually, 300 stocks. And if you are a member, I can do a review like this for you from a minimum of $5. I can also then cover the earnings for you as well. So over here, I shall put the HP Enterprise playlist. I think it's the first time I've reviewed the stock, so I shall create its own playlist where everything will go news-wise, also things to do with the earnings and so on will go in there. And down here, I'll put the Alpha Spread playlist, all of my stocks, so you can go through all the reviews and they're all in order as they come out, so you can start from the top and work your way down for the latest analysis. Until next time, as always, take care of yourselves and each other. Texas Pacific Land, full analysis, an updated analysis from what I did some months ago, when if you'd listened to the analysis I gave, you'd be up some 200% from then. I said it was the best stock you can own in the whole world, and I stand by that, and I'm going to explain now in a deep analysis. Last night, I put out a video and shared the history with you about the company and plans for Elon Musk, Donald Trump to cover the Permian Basin with solar panels, wind farms, so on and so forth, despite what Donald Trump says about birds get killed by wind farms and all this stuff. Despite all of that, the growth right now is off the charts, and I'm going to share with you some more information today. So let's get straight into it. This is a video you need to watch all the way through. I put out the last video last night, and many of you stopped watching.